The opinions expressed by Karen Scott Mims and the guests on this podcast are their own and do not reflect the opinions of this podcast platform. All statements and opinions expressed are based upon information that's considered reliable, although it should not be relied upon as such. Any statements or opinions are subject to change without notice. Investments involve risks and, unless otherwise stated, are not guaranteed. Past performance cannot be used as an indicator to determine future results. Any strategies mentioned may not be suitable for everyone. Information expressed does not take into account your specific situation or objectives and is not intended as a recommendation appropriate for you. Before acting on any information mentioned, please consult with a qualified tax or investment advisor whom you have specifically retained to determine if it's suitable for your specific situation. This podcast is designed to provide accurate and authoritative information with regard to the subjects covered. Investment advisory services are offered through Brookstone Capital Management, LLC, a registered investment advisor. BCM and Harbor Point Wealth Management are independent of each other. Insurance products and services are not offered through BCM, but are offered and sold through individually licensed and appointed agents. Income regarding safe and secure investments and guaranteed income streams refer only to fixed insurance products. Insurance products and services are not offered through BCM, but are offered and sold through individually licensed and appointed agents. Income regarding safe and secure investments and guaranteed income streams refer only to fixed insurance products. They do not refer in any way to securities or investment advisory products. Fixed insurance products and guarantees are subject to the claims paying ability of the issuing company and are not offered by Brookstone Capital Management. Most people simply ignore taxation through the 4 phases of your wealth. Instead of understanding the 3 tax buckets, you arrive at retirement with a huge 401k in the tax-deferred bucket and ignore the taxable and, most importantly, the tax-free bucket. How can the middle-class millionaire, average Joe and Jane, be so unprepared about how to protect their wealth using tax loopholes like the wealthy 1%ers do? Easy. Welcome to the Tax Smart, Tax Zero podcast. This is a show about tax-free wealth. Financial advisors sell rate of return. Annuity salesmen sell what else? Annuities. And part-time tax preparers sell a 1040 to submit on April 15th. But the real goal is to implement strategic tax planning. We invite you to take the journey and explore the path to the 0% tax bracket. It's time to divorce Uncle Sam from your wealth. And now, your host, noted tax attorney and private wealth strategist, Karen Scott Mims, Esquire.
So we're going to start out with this notion of kind of asking the question, what is tax planning? Why do we think it's so important? Why do we focus on it? And certainly, why is the show called TERP, standing for, of course, tax efficient retirement planning? So tax planning is actually the education, research, analysis in the complex area of taxation to make informed decisions to either reduce or, even better, eliminate your tax liability. Now, one of the questions that certainly needs to be answered is, why don't you receive it? I think you look for it, if at all, in the wrong places by people who either don't believe in it or, more commonly, don't possess the expertise in the complex area of taxation such that they are able to provide you with that kind of advice. So, along with this concept of tax planning, we take it a step further. We believe in the concept of tax planning in the same year that decisions are being made and that transactions occur. So in other words, no later than December 31st, we've prepared the tax return. We know the tax liability. We know what the tax savings are. We know exactly what has happened because everything for 2019 is actually calculated in 2019. We also have what we call a Tax Smart, Tax Zero planning portal. And so what does our portal do? Well, first of all, you have the benefit of being able to do a what if analysis, right? And so people make decisions all during the year. Unfortunately, they make uninformed decisions because, again, no one has done the math, the research, the education, the analysis in order to make an informed decision. It also allows us to have organization of what you currently have, which is, I have to be honest, nothing but a financial junk drawer. It also allows us to have a couple of different elements that I think are very important. It allows us to have a cash flow and budgeting planning resource. It allows us to have an ICE folder. And by the way, ICE stands for in case of emergency. And it also allows us to do, once again, tax mitigation in the same year that transactions are happening. What if we wanted to know the consequences, the tax consequences, to be clear about paying off our mortgage, right? Certainly, we can go right into the Tax Smart, Tax Zero planning portal, and we can find that out. What if you wanted to have your financial future mapped out month by month, day by day for the next 40 years? That is something we can do in the Tax Smart Tax Zero Planning Portal. You, of course, are listening to the Tax Efficient Retirement Planning Show. I am your host, Karen Scott Mims. Thank you so much for joining us today. I am, of course, tax attorney, registered investment advisor representative, estate planner, accountant, and my absolute favorite role, private wealth and tax advisor. So our show for today is entitled The Distribution Phase, Consequences of Your Contributions in the Wrong Tax Bucket. Now, you might say to yourself, well, we're talking about contributions. Isn't that a pretty simple subject, right? Like, how could that be so complex? Believe me, it can be. So let me give you 5 examples, right? First, I'll introduce you to Sam and Susie. Sam and Susie are age 62. Sam is a FERS system employee with the federal government. Susie also is age 62, and she works for Kaiser Permanente. They kind of came in and said, there are 5 transactions that we did last year. We think that we've done them correctly. We're fine, right? We don't need to talk about them, but okay, if you want to ask us. So we went through them one by one. So let's do that with you. Example number 1. So Sam made a contribution to a Roth 401k, and he was very, very adamant that this works exactly like a Roth IRA. Well, Sam, that is not the case, because certainly when we talk about a Roth IRA, we have 2 5-year periods. We don't have required minimum distributions. And that is not the same thing that happens when you have a Roth 401k, because remember, a 401k is actually an employer type of account. And so a Roth 401k is not treated identically the same as a Roth IRA. So example number 2, Sam came in and said that he made a contribution to both his traditional IRA and his Roth IRA. And we said, well, okay, do you mean you put 5,000 in one account and 2 in the other, or maybe 3 and 3, or 6 in 1, or some combination thereof? And he said, no, I put $7,000 into the traditional IRA, and then I turned right back around. It was such a great idea, and I put another $7,000 into the Roth IRA. Sam, this is what we talk about, not understanding the complexities of tax law, because that is not permissible. Scenario number 3, Susie comes along and says that she made a contribution to a traditional IRA that was not deductible. Okay, that's fine. Okay. But what she has to understand is that there are 2 levels of eligibility, right? So are you eligible to even make the contribution? And then are you eligible to actually deduct the contribution? And quite frankly, it's kind of advanced, right, for us to say this. And we'll certainly, we kind of have our tax study group. This is one of the themes that we talk about in the tax study group. What happens if you make a contribution to an IRA, but that it's not deductible? That, believe it or not, is a good thing if you understand what to do. Scenario number 4, what if you made a contribution to the TSP? You're a FERS employee, you've made a contribution to the TSP, and you have done so in one lump sum payment. You go, I don't want to drag this out over the 12 months. Let me just make it in one lump sum payment. Well, by now, right, you realize that that was a horrible mistake, because in order to have the 5% matching, it has to be done equally over, right, the 26 pay periods. You, of course, are listening to the Tax Efficient Retirement Planning Show. I am your host, Karen Scott Mims, tax attorney, registered investment advisor representative, estate planner, accountant, my absolute favorite role, private wealth and tax advisor. Our show for today is entitled The Distribution Phase, Consequences of Your Contributions in the Wrong Tax Bucket. So we're talking about these 5 different scenarios. By the way, let me tell you scenario number 5. Sam is age 85. His daughter has just recently taken over his affairs. His daughter notices that there is an automatic withdrawal, which was actually not a withdrawal. It was actually a continuing deposit into his traditional IRA, right? So withdrawal from another account, a deposit into the traditional IRA. And she lets that go on for 10 years. Is there a problem with that? Well, absolutely, right? You can see that the problem is that, right, can Sam at age 85 make a contribution into the traditional IRA? The answer is no, because at this point, it has nothing to do with whether or not he has earned income. It has to do with age, right? He is beyond the age at which you can make a contribution. Well, there is absolutely positively a difference between tax planning and tax preparation, right? Tax preparation is certainly what you're used to doing. January through April, it is the notion that you are going to wait until the year is over, and then you're going to go to the tax historian, i.e. the person that prepares the return, and you're going to say to them, do what you do, right? And what they do, quite frankly, is prepare a document to send to the IRS. There is no tax strategy. There is no strategic tax planning. There is no chance of correcting any mistakes. And so that's why I said in the beginning of this show, we are doing and embracing the concept of, you know what, the tax return for 2019 has to be finished by 2019, because we need the opportunity not just to go back and see if we made any mistakes. We need to understand whether or not we have done everything. We have taken all of this strategic tax planning. We have taken advantage of all of the loopholes, right? We have done what we need to do in order to remove Uncle Sam as our primary beneficiary. In case you have just joined us, you are listening to the Tax Efficient Retirement Planning Show. I am your host, Karen Scott Mims. Zero is my hero. That, of course, is the name of our study group. We talk about the whole idea of being in a 0% income tax bracket at both the federal and the state level, a 0% capital gains tax bracket, a 0% estate tax bracket. Don't be fooled by the federal exemption at $11 million. States like Maryland have decoupled. So has the district. And so we have to understand how to have a 0% estate tax. Again, a 0% excise tax. Remember, when we talk about the whole idea of required minimum distributions, the 50% penalty that you pay because you missed a required minimum distribution, that is nothing more than a excise tax. The 6% tax that you pay because, in the earlier example, you can't contribute both right maximums to a Roth IRA and to a traditional IRA, that is called an excess contribution. You will be penalized again and again and again, right, at 6% for the money that you put in there, not just the money that you put in there, but all that it has grown to. Needless to say, you're listening to the Tax Efficient Retirement Planning Show. I am your host, Karen Scott Mims. The number here is 866-621-6660. Again, that number is 866-621-6660. It is time to tap out and to realize that you have had no formal training in investments or finance, much less the complex area of taxation. It is easy to make emotional decisions, but the consequences are mentally and financially conflicted with your well-being and your assets that should be, by the way, utilized for your benefit, okay? It's natural to nurture, but what isn't natural is that you are nurturing to the point of enabling, even when it comes to relatives, right? So you hear me say there are three things that do not mix well with your money. One of them is taxes. The other two, quite frankly, are friends and relatives, okay? So if 2020 is the year that you have decided, you know what? I want to do more than just look at the tax return for longer than 5 minutes to sign my name, give us a call. The number is 866-621-6660. Not only do I want to look at it, I want to understand it. Again, the number is 866-621-6660. I'm going to take it a step further and say, if you want to take control over your wealth and have a complimentary tax consultation, the number to call is 866-621-6660. I will say to you that if you want to really expedite the process, you can text the word tax, T-A-X, to 301-900-5758. Don't go anywhere. We'll be right back.
Of all the questions you get asked every day, this is one you shouldn't ignore. How much money in your 401k or IRA is actually yours? Not what its current value is, but how much of it will end up in your pockets, not the government's. Remember, you still might owe taxes on that money. And how about tax efficiency? Are you overpaying, or are you keeping every dollar you're entitled to? Look, I know it's confusing, it's complicated, and it definitely isn't fun. That's why Harbor Point Wealth Management works to help make sure you aren't paying more in taxes than your fair share. They have a complimentary report to help make sense of taxes and how they can impact your retirement. Get it today. It's your money. You deserve to know what's at stake. Don't do the IRS any favors. Get your complimentary tax report from Karen Scott Mims and Harbor Point Wealth Management today. Just text the word tax to 301-900-5758. That's the word tax. Text it to 301-900-5758. Investment advisory services offered through Brookstone Capital Management, LLC, a registered investment advisor. BCM and Harbor Point Wealth Management are independent of each other.
Welcome back to the Tax Smart Tax Zero podcast. And now, your host, noted tax attorney and private wealth strategist, Karen Scott Mims, Esquire.
I am your host, Karen Scott Mims. In this second half of the show, you know that we like to call this second half of the show Tax Liabilities and Loopholes. We do that because we are focused on removing Uncle Sam as the primary beneficiary for your 401k, 403b, 457, or TSP. We believe in true comprehensive wealth management. When we talk about retirement planning, we quite frankly are not just talking about your portfolio, because a portfolio is not a plan. And if we are ever going to be in the 0% tax bracket, zero is my hero, then we have a lot of work that we have to do right ahead of us. You know, it's interesting. There are two tax systems in this country. There is one for the wealthy who understand and proactively seek to, by the way, successfully avoid taxation. There is another tax system for the middle class who are victims of the tax system. And I have to say, though, in some ways, that is because we act as though there is but one section of the tax code. We act as though the only section of the tax code that exists is the one that references and encourages you to have a 401k, and that is not the case. So how can it be that this is being ignored? Well, I have to say, I think there are a couple of reasons. Number one, because at some point we have to understand that the question, i.e., what type of mutual fund is going to be best over another type of mutual fund, can't really be the question that's at the forefront of our mind. We can't really say that we are more concerned about whether the portfolio manager of our favorite mutual fund can beat the returns of the S&P 500. I don't really think that's the answer. Quite frankly, I'm even trying to understand why you're still using mutual funds, but that kind of goes back to the fact that, right, you're saving in the tax deferred bucket. That is the qualified employer bucket. And that is what's offered, right, in those qualified employer plans. I don't care what you say, you're going to have a mutual fund and you're going to love it. You, of course, are listening to the Tax Efficient Retirement Planning Show. I am your host, Karen Scott Mims, tax attorney, registered investment advisor representative, estate planner, accountant, and certainly my favorite role, chief wealth strategist. And so our show for today is entitled The Distribution Phase, Consequences of Your Contributions in the Wrong Tax Bucket. So instead of asking all of those questions, right, and taking the mindset that we just talked about, being oblivious to taxes, right, that certainly is going to be something that comes back to bite you. I'd like to ask a question. What about if we present some real questions with some real answers, right? Number one, will I run out of money in retirement? Number two, will I be able to maintain my same standard of living? Number three, what do you mean by 60-40? Because one of the things that happens is that we have been convinced that the only 60-40, right, that we're talking about is the one that refers to the portfolio mix, right? So first you realize that you are far too successful for anyone to make you believe that mutual funds should actually be the investment of choice, right? So the fact that someone says, hey, 60%, growth mutual funds, 40% bond mutual funds, no, the 60-40 that really needs to be addressed, it is the 60% of that tax deferred money that belongs to you The problem is that it's the 40% that belongs to the IRS. And so you've got to go about the very real task of reclaiming your 40%. That is required. That is not optional, right? You have to understand the consequences of tax deferred money. So if this is something that you're ready to do, you want to sit down and have a complimentary tax consultation. The number to do that, right, to get on the appointment calendar is 1-866-621-6660. Again, that number is 866-621-6660. Now, let me ask questions. What standard is it that you want applied to you when it comes to dealing with a professional, right? You certainly want them to have tax expertise. Okay. I am a tax attorney. Obviously, I have that expertise. Do you want someone to say, I'm going to treat you like everyone else? Or do you want to have the best interest of the client standard? So in other words, do you want someone to treat you such that your interest, right, comes first, now, forever, and always? It's kind of funny. I remember in that commercial, they have like a car commercial, and they say the customers will get treated the same like the employees. It makes you think, and you just assume from that the employees get a discount. But what if there's really not a discount for employees, right? You have to stop having this arbitrary standard, i.e. the reasonable standard. It can't be capricious. It can't be arbitrary when it comes to the money that you have saved over a 40-year period. The standard absolutely positively has to be best interest of the client. And some of the questions that need to be asked, can you help me now that I realize the serious consequences of tax deferred money, right? Because I don't want tax deferred money, okay? I think it really starts with asking, can you help me quantify the lifetime tax liability? One of the things that I think absolutely positively needs to happen is that we need to kind of embrace the concept of zero is my hero. What do I mean when I say that? Well, number one, I'm talking about the concept of having a 0% income tax bracket, right? Again, we're talking both at the federal and the state level. Number two, we need to have a 0% capital gains bracket, okay? We need to have 0% estate tax bracket. We need to have a 0% excise tax bracket, and we need to have a 0% inheritance tax bracket, right? Because I think one of the things that will happen, certainly, and that will become evident to you, when you understand the concept of comprehensive wealth management, we're talking about having a number of different plans that are not, right, kind of optional. They're essential. So zero is my hero. I am talking about having an income plan. I am talking about having an investment plan, not just an income plan, not just an investment plan. I have to have a healthcare plan. It has to be a healthcare plan that talks and has a plan for me, not just for a wellness plan, but also for long-term care. I have to have a Social Security plan. Okay. I can't just pay 6.2% into Social Security for a 40-year period and then just take kind of a very lazy, right, kind of don't care attitude about it. Most of all, I need to have a tax plan because, again, one of the biggest problems that I think that people are suffering from is the fact that they are not differentiating between tax preparation and tax planning. So they're two different things. And until you grasp the concept that you cannot expect to have strategic tax planning with the idea that you're going to walk into someone's office, you're going to drop off some papers, they're going to spend about 10 or 15 minutes with you, you're going to come back, you're going to spend another 10 or 15 minutes, you're going to sign a return, and that's going to be it. That can't possibly be strategic tax planning. I think we want it. I think it doesn't really exist. And so if you are age 60 or older, maybe it's the first 5 years of retirement. Maybe it's you're 5 years away from retirement. I would say to you, let's sit down and have that complimentary tax consultation. The number is 866-621-6660. Again, that number is 866-621-6660. We have a way that we rate the tax preparer. We want to know how much they charge, right? The cheaper, the better. We want to know how much of a refund, the bigger, the better. and we rate them on factors that would cause them to spend the least amount of time with us, that forces them to just be historians. Hey, I'm just going to prepare the return. That would dismiss the concept of tax optimization strategies in the distribution stage, because again, anybody can guide you right in the accumulation stage. You need someone with tax expertise to guide you in the right, hopefully in the accumulation stage, but definitely in the distribution stage. And I say that because it is the decisions that you make in the accumulation and the preservation stage that make my job much easier, right, when we get to the distribution stage. But that's okay if you've never made those tax decisions, if you've never had anyone who is a tax attorney to sit down and be a part of your life and be a part of your financial future. I cordially invite you to do that now. My name is Karen Scott Mims. You, of course, have been listening to the Tax Efficient Retirement Planning Show. So if you feel like it's easier to text, certainly do that. You can text the word tax, TAX, to 301-900-5758. Again, that number is 301-900-5758. You know, speaking of that standard, we kind of do that to the person who manages the portfolio. Well, you know, kind of like, how cheap is it? You know, what's the return? You don't have a rate of return problem. You have a tax problem. And that is a problem that you need to solve sooner rather than later. So again, if you're ready to do that, my number here is 866-621-6660. Again, you have been listening to the Tax Efficient Retirement Planning Show. I am your host, Karen Scott Mims, tax attorney, registered investment advisor representative, estate planner, accountant, my favorite role, private wealth and tax advisor. And so I say to you as we close, Zero is my hero. That is the name of our tax study group. If you'd like to join and know more information about our tax study group, give us a call. The number is 866-621-6660. Thank you so much for listening. Barbara, if you've joined us and are listening, get back to work.
This concludes another episode of the Tax Smart Tax Zero podcast. Get ready to create tax-free wealth and start on the path to the 0% tax bracket. To receive your Tax Smart Tax Zero toolkit, you can reach us by telephone at 866-621-6660 or text the word TAX to 301-900-5758. Or send an email to tax@taxsmarttaxzero.com. Want to attend our virtual seminar, Guide to Tax Minimization, Estate Planning, and Passive Real Estate Income? Text the word seminar to 301-900-5758. Send an email to seminar@taxsmarttaxzero.com and we'll register you and also keep you updated of all future virtual seminar dates and times. Don't forget to visit taxsmarttaxzero.com and on our YouTube channel. There, you can like us and subscribe to learn more about our tax study group, Zero is My Hero, or attend our upcoming webinars. Follow us on Facebook. And as always, sign up for our monthly tax newsletter and divorce Uncle Sam as the primary beneficiary of your wealth. Join us next week for another episode of Tax Smart Tax Zero, the path to the 0% tax bracket.